I hope you all are enjoying these sessions and getting some valuable insights through our honorable speakers. Hopping on to our first panel discussion of the day, the evolving digital journey. Does Indian BFSI industry need to rethink the business model? For which we have with us Mr. Gopal Kiran, Global Head in Banking and Financial Services Insider, Mr. Ankit Khare, Chief Technology Officer, Shivalik Small Finance Bank, Mr. Parag, President Head Consumer Lines, Tata AIG General Insurance, Mr. Sandeep Ranjan, Chief Digital Officer, Shriram Housing Finance Company,
Hello.
Mr. Surajit Roy, MD and CEO, IDBI Intech, Ms. Seema Gaur, Senior Executive Director, IT, Iffco Tokyo General Insurance, Ms. Priya Deshmukh-Gilbile, Chief Operating Officer, Manipal Sinha Health Insurance, Mr. Rajesh Garg, CVP, Chief Digital Officer and Head of Cybersecurity Practice, YOTTA Infrastructure. A very warm welcome to you all. Mr. Gopal Kiran will be
Thank you.
moderating this session. Over to you, sir. Looking forward to a great session.
Surajit Roy, you
Yeah,
may
hi.
start, please. Yeah.
Yeah, I think it has been widely spoken. There has been a better time for the entrepreneurs, and we have seen a rise of the unicorns in India. I think some of the factors which are leading to this rise of unicorns in India, according to all of us, we feel that I think the consumer behavior is one thing which is actually leading to the change, and especially the millennials who are on an online activity. So people doing banking or financial services needs to be online. So are the millennials. We are seeing private equity funds availability. We are seeing infrastructure of digital growing rapidly, and that was one of the key areas where you have seen a lot of boom in the digital sectors for these unicorns to come in India. There is a huge push from the government too, in terms of Aadhaar being the identity for individuals for us in India. And with this Aadhaar, we are able to create a lot of digital online onboardings and so many use cases being formed across the country. And this has really paved a way for digital, unicorns in India. And the expectations, what I feel, which can come in 2022, is more on the opportunity on digital assets using blockchain. I think there will be huge investments in the blockchain, and with the advent of 5G applications, I think the entire digital landscape is going to be changing very rapidly. These are the two things which I feel. One is the factors influencing the digital unicorns in India, and the expectations in 2022. Yeah, Priya.
Yeah, thank you. I guess very interesting topic, and Mr. Roy for sharing your perspective. Talking about the factors which really propel, digital disruption that we've seen, and especially in the fintech ecosystem, we've seen a lot of skyrocketing in the popularity in the recent years, especially driven by the pandemic. Across banking, financial services, and as well as insurance, where I come from Manipal Signa standpoint, and we've seen particularly a lot of soaring happening around digital lending services, transforming loan process, disbursement. We all have witnessed how fintech has basically transformed the banking sector. Now, talking about India, the unicorn element dominates the unicorn space. India dominates the unicorn space. Now, talking about highest number of. Am I audible?
Yes,
You
yes.
are.
Yeah.
Good. Sorry
Very
for
good.
this. Some challenge on the platform. Just give me a second, please. Yeah. So we've seen a lot of disruption around banking, lending, investment, payouts. Also across insurance, and the factors which really have propelled this beyond internet of the things, and internet penetration has been around in India for last couple of years, but the pandemic really propelled the adoption. People and industries and consumers have come on a common platform, because companies have to really come to terms and come on digital platforms where the consumers are spending the maximum time. With that, we've seen InsurTech really kind of seeing a huge propelling around that, and as we know, the sub segments around payments, investments, wealth technology, edtech, as well as insurance technology. We know that upwards of 70% payments and digital lending has come onto through the InsurTech disruption. Talking about Talking about digital payment transactions, we know in the last 12 to 18 months, upwards of 75% uptake has happened. And factors which really have created an ecosystem. Of course, digital is the new normal in the post COVID era, if I can say so, because we're still battling with the nuances. Talking about digital market growth, enabling financial inclusion and of course penetration and adoption, technological advancements and cost reduction being one of the factors, and better consumer experience, that kind of led by personalization, hyper personalization, newer technologies disrupting the entire consumer experience, and obviously the government initiatives. So a lot of stuff around digital disruption, and that's what is forming the core. So may I now request Ankit? He has huge amount of experience from technology standpoint across small finance bank. So Ankit, could you share with the growing expectations of banking services, especially around experience from consumers? How do you make sure you're keeping pace with the right technology investments, and while keeping the cost of innovation to minimum, because every dollar that is spent, ultimately the consumers and the industry has to bear it in the longer term. Subscription model, subscription banking, platform driven models, these are the buzz. So what's your view on these tech driven business models? Are we ready to scale up? Ankit, may I request you to come on board?
Yeah, thanks, Priya. I think all of us continue to evolve in this post. I'll prefer saying post-pandemic era. I think just staying positive about it. Um, but yeah, I mean, for banks like us, I think we are already in a very competitive space, and it's quite important for us to remain agile in terms of adapting ourselves quickly to the market demands and the customer expectations, staying relevant, keeping the cost overheads to the minimum. And that's where we as a bank, we the early adaptation to cloud based models, SaaS, PaaS, and IaaS, has helped us immensely in our in our growth journey. So unlike perpetual model, I think subscription based approach has made it very simple for us to invest into newer products, solutions, tools, and keeping our upfront cost minimal, and and the commitments also, which in turn leaves us very comfortable to switch over to better ones, as and when we come across something, or the demands or the needs change, without worrying about the cost implications. And the time to market definitely goes down drastically, which helps us to have a early mover advantage. On the infrastructure side as well, we have been adapting to IS way of deploying our mission critical application. So subscribing and paying up for only the capacity that is required to serve the need, and having that flexibility to scale up quickly whenever required has saved us a lot of cost in terms of the running expenses. And we were as a bank, we were the first ones to be running our core banking systems on the cloud when we did that a few years back. And not just CBS, in fact our integration engine and other key applications have been running on the cloud, with add-ons like managed services, 24/7 monitoring, and the support for regulatory and risk compliance that the cloud providers have been taking care of, has actually helped banks and financial institutions to adapt to the the cloud model of running their applications. Overall, I think it has become comparatively cheaper and easier, and also risk free to a certain extent, to explore or rather try out better ways to serve our customers, which essentially has promoted innovation at our end. Mr. Ranjan, I think you bring a lot of experience from that perspective as well. Would you like to add up to that?
Yeah, sure. Thanks, Ankit. I think you've touched upon a few of the critical items like cloud and the advantages that it brings in terms of overall operational expense management, etc. However, I would just want to touch upon from an NBFC and an HFC perspective because I come from a housing finance company, and here the products that we offer to customers are pretty simple, right? The customer take a loan from us, they are with us for a certain period of time for the tenure of the loan, and after that, depending on whether they want to take another loan, the next set of interactions with the customers happen. The customer expectation for from our perspective is pretty simple, right? They expect a simple onboarding process and simplified service. These are two key expectations from the customer, and apparently pandemic hasn't even changed that. They only it has increased the customer need for a responsive or a more responsive products and processes. When I say ease of onboarding, which means ease of documentation, simplified loan processing, simplified documentation, etc. So we, all of us, and it has been aided by the pandemic itself that we have been investing in technologies which help us simplify these processes further. And I think a lot of innovations have happened in the past, which have got adopted very well during the pandemic times. And the advantages are now coming in because even when people are coming back to office, we still continue to use some of those solutions, which brings in a lot of efficiency in the system itself. One of the things that you touched upon was cloud computing. I think Shriram Housing Finance also migrated to cloud, and we are continue to see the advantages of a low capex model, and also thereby getting more controls on compliance and usage of the services.
Thanks,
Uh,
Sandeep. Hi, everyone. This is Gopal. I'm supposed to be the moderator for this session, but unfortunately, because of some technical glitch, I joined late. And thanks, Priya, for taking my hat. So, without further ado, I will take this discussion forward. Apologies again. Maybe my next question will be with Parag and Seema. So it is mostly touching on the insurance angle. So I think both Parag and Seema, I think we have seen in the insurance industry there's a lot of new business models that are coming up. Many of the insurance firms, I think for sure you may be doing a lot of activity with respect to digital intermediation and the digital distribution models. So I would like to get your views on how do you balance this proportion between traditional banca models versus digital distribution models. Maybe I start with Parag with you first.
Thanks, Gopal. And we were missing you. So on the insurance side, I would start by saying that if you look at the uh, digital maturity or a digital innovation scale, insurance would be way behind in terms of the disruptions that have happened and we're seeing all around. I think insurance has been a laggard to a certain extent. So whatever disruptions and investments that you are seeing right now, digital, the so-called insurtech plays, as you rightly said, major investments have been into the distribution side, while some amount of investments have gone into process automation as well as ease of customer transactions. But again, as compared to payments, as compared to banking, etc., I mean, it's very very low, and I'm sure this would change going forward. But specifically to answer your question on the digital distribution models, at least at Tata AIG, we believe that that model is not predominantly driven by I would say innovation, but it is basically a capital-driven model. So what we do is that we try to create that type of ease of channel partners within the organization itself. So we've set up an innovation lab, in-house innovation lab. So most of the tech solutions or the disruptions that are being seen in the market, we're trying to create that in-house as an organization, and try to balance out in that form. So we believe that the insurance companies, the incumbent OEMs, can themselves lead this disruption, instead of the fintech, the insurtech players which are coming in. So that's our belief at Tata AIG.
Thanks, Parag. I think
Uh,
you have touched a very important elements with respect to partnerships and having own innovation lab. I think I see this globally. Many of the insurance firms are also in the same thinking as yours. So maybe Seema, if you would like to add some additional points to the same question.
Yeah, thanks, Gopal. Adding to what Ved has said, in the insurance industry, I somewhat agree to what he said that yes, we are lagging behind the banking institutions. It is because the customer, know your customer benefit, which banks had before us, where they were able to make use of Aadhaar card and UIDAI integration. The insurance companies were given this privilege at a later stage, just 1.5 to 2 years back by UIDI. So the customer segmentation or knowing your customer and servicing the customer in the right manner at the right time is what the insurance industries are now looking forward to. So when you talk of the traditional distribution channel versus the digital disruption that we see today, the we in Iffco Tokyo feel that the digital disruption is not going to do away with your agents or brokers. Rather, we tend to provide this as a tool. The automation, the AI, ML, all are now acting as a tool of fueling the distribution traditional distribution channel with the right information at the doorstep of the customer. So once you have is the direct to customer channel, which is through the portals or the mobile apps. But I agree in insurance sector, even today, you need to, there are certain products which may not be following a straight through process or may not be, the customers may not be aware of all the nitty gritty of the terminologies to be filled in an insurance form. So in that case, it is the tools through the use of AI or RPA automation, we tend to provide those ease of filling up the forms and ease of user experience right at the distribution channel. That is, even if it is my agent or a broker or a traditional bank assurance for that matter, the user friendly interface which is provided to them has got all the ingredients coming from the legacy or the backend systems via APIs such that they are able to serve the customer in a seamless manner. And when you talk of direct to customer channel, there we tend to provide an omni-channel experience to the customers. Even if it could be voice bot, it could be your IVR that is tending to move in a way that we are able to serve the customer in his or her own dialect. So we are working in the direction of providing voice bots in the native languages, the vernacular
All right.
languages prevalent in the country, so that the customer gets the right information while onboarding or while buying insurance, while renewal of their policies, while servicing, or even for the claims adjudication. So this is what I feel the AI, ML, or the RPA, the automation, the digital disruptions are there to service the front end customer direct or the partners and using these as the themes. That is all from my side. Yes, Gopal. I think Gopal, we've lost him
All
again.
right. Thanks for the inputs. Able to hear me?
yeah.
How's it now?
Yeah, we can hear you, Gopal. Now, I would now request Rajesh Garg to give his inputs on the reinvention of the business models and how he sees achieving alternate source of revenue, focusing on data safety and security. Rajesh
Yeah,
Garg.
yeah. Good day, everyone. So, I would like to give my views on this basically. So as we are seeing that customer experiences are today at the heart of digital banking services, and hence banking institutions are trying to align their technical investments along with the customer experiences. Now, what we have seen is that instead of siloed digital initiatives, what is becoming key to great customer experience is innovation and seamless integration of various heterogeneous technologies. However, the silver lining is that the digital solutions have evolved to provide both best breeds of worlds, basically innovation as well as intuitive services, along with cost efficiency coupled with resiliency. So what we are seeing is that the customer experience, innovation, scalability, and cost efficiency are the key defining factors for the success of any digital banking platform. Now, beside this, what we are also seeing is that the banking institutions are focusing more and more on the hybrid IT infrastructure, and this helps them to run their new age workloads in an environment which is best suited for their business, rather than running it from a centralized on-premise infrastructure. So, and this is becoming a key, and this is basically, and they're all also able to reinforce a platform approach driven by both microservices and API banking. Uh, Beauty is that in this case is that most of the banks are trying to align uh, to as a service model, and this is basically helping them to achieve scalability, reliability without any capex infrastructure upfront. Now, as a data center and cloud service provider at YOTTA, we are not only providing a robust, fault tolerant, high uptime, highly secure DC and cloud services environment for their workloads, but we are also hosting a lot of banking solutions, which includes the core banking platform, anti-money laundering
So,
solution, reconciliation, settlement system, and all of them on an extremely highly efficient consumption model, which is becoming a key. And we have modeled one such offering, innovative offering, in the form of Bank in a Box, where the entire offering is on an OPEX model, and this is helping the banks to ensure efficiency, customer experience, and at the same time, low cost along with the security, complete security
So,
initiatives.
Rajesh, I think as a follow-up, the key insight I would like to know is, I think the banks and the insurance companies are disrupting on their own. So, how do we make the right balance between the customer security, regulatory compliance, risk angle versus the innovation? So, where is the thin line or the balance?
Sure, Gopal. So what we are seeing, as you are seeing, that in like any other sector, even in the CIOs in the BFI sector are also at the helm of driving innovations while maintaining stringent compliances and security measures. The balancing will come. Normally, actually, it is a challenge. However, the solutions today have evolved and adapted to the data security and compliance needs. Interestingly, technology solutions are also in turn enabling BFSI players to ensure better compliances, mitigate risks. And at UTA, what we have done is like our anti-money laundering solution, which is powered by IDBI Intech, leverages AI for anti-money laundering screening, as well as reduction of false positives, and helps customers to meet their regulatory requirements for extremely unique customer identification codes. It also helps and enables customers with risk modeling, risk analytics, helping them identifying customer links with the bad actors, dubious jurisdictions, companies, and UBOs. Similarly, our payment application data security certified reconciliation and settlement solution, which is again powered by IDBI Intech, helps customers to achieve reconciliation with unmatched speed and accuracy. Now, apart from that, at UTA, we are also managing all the compliance requirements related to infrastructure, technology, and helping banks to enable as well as balance digital innovations with risk management and mitigation. This is the reason one of the largest multi-commodity exchange MCDEX is hosted with us. So as we see, while balancing both was a challenge earlier, but the good news is that more and more opportunities are coming in to address them through innovative offerings at an extremely optimized costs. So that's what my view is basically.
Thanks, Rajesh. I think that's very clear, and you have to balance all the dimensions to achieve the efficiency. I think a lot of work going on your way. Maybe in my next
Absolutely.
question, I will move to Mr. Surajit and Priya. So, Mr. Surajit, I think with your experience, um, do you think there is like the way we are inventing the banks and reinventing the banks and insurance companies, do you think we need to redesign the boards of the banks and insurance companies? Do we need to bring in young talent, like the way at fintech model of operating, or the young experts into the board? What are your views? Maybe I start with you and then followed by Priya.
Yeah, thanks, Gopal. I think the need of the hour is to have a digital strategy committee at the board. You know, the digital strategy needs to be driven from the leadership, covering all the aspect of digital transformation. Instead of saying constant change, I would rather say the change needs to be handled in an agile manner, and that's the need which we require at this hour. So when we constitute a board with the talents to be there, there are couple of things which needs to be monitored, and it's very important in a digital transformation day. Is a continuous assessment and understanding of business implications of technology. That's the first point. The top leadership or the committee or the members who are from the board needs to direct the organizations to look at it. Second, creating business value through digital transformation. And third, very important, is how do you track the digital transformation? The tracking of digital transformation, ensuring the practical way of measuring each of the digital transformation, what it implies to a business outcome, is very, very important. So these are a couple of things which needs to be there as a part of the governance from a board perspective is concerned. And obviously, the talent pool of the digital needs to increase right now, and we have seen there is a significant increase in the talent pool which is concerned. So these are our views, which we need to have a digital strategy committee of the board comprising of the talents, the young talents being inducted into it.
Thanks, Suruchit. I think you've brought a very important point of how do you measure the success of the digital transformation? What kind of leading or lagging indicators we put in the overall process? So maybe Priya, I mean, thanks for taking my role again. I have to send you some extra chocolates from Malaysia. Any thoughts on the same question?
Sounds exciting. Thank you for that, Gopal. And as Mr. Roy mentioned, um, you know, given that digital innovation and some of these technologies that we're talking about have existed for decades, and as I was mentioning at the beginning of the session, it's all about propelling, the adoption bit. So meeting customer needs is going to be the utmost priority for insurance providers in the year 2020 and fast forward, and especially kind of by adopting technological advancements. Now, having said that, the customer really takes a center stage, and not that the customer was not at the helm of everything we did, but now there are new tools, techniques with which we can augment the overall experience bit. And that's where the question comes around being curious and being, kind of having listening posts for the consumers, being on the platforms where the consumers are interacting from a selling perspective, but more importantly from a service and kind of handling the entire value chain bit. It's important that we remain curious, and the innovation bit is extremely core to that across the value chain. And that's where we heard Parag speak about having the innovation labs, and I must say, as Manipal Signa, we also have something similar to that. Not only from a digital transformation perspective, but bringing newer ideas on board and trying and testing those, trying and allowing them to really flourish. And that's where a separate kind of a governance structure, as Mr. Roy mentioned. What are the kind of enablement that is happening? What is the cost being put? How is it enabling customer experience and NPS journeys? How is it also giving ROI for the company from the longer run standpoint, and taking the landscape of digital transformation ahead? So those are the elements that are going to be extremely key and pivotal as we move forward. And talking about the millennials, yes, it comes back to curiosity and trying, having the daredevil to try new things and fail, and to integrate those learnings and try again. So that agility, as he was talking about, is extremely important as well. That we could blend together as we move forward as an industry. Thank you, Gopal.
Thanks, Priya. I think your answer encapsulate the lot of hard work you have done across your experience, and I can really see how you've got your hands dirty in transforming some of the institutes. And every time when I hear the word millennial, I thought they're talking about me, but I feel I've lost half my hair. So So moving to the next question, I would like to call Parag and Seema. So even though there's a lot of new technologies that is coming up the way, um, the fundamental agenda like insurance inclusion is still on the low. So I would like to get your specific thoughts, any specific use cases, and how we can bring this, how we can support this macro objectives like insurance inclusion, etc., with this new business models and technologies. Parag and Seema.
Yeah, Seema, you would like to go on, or
Yeah, okay.
I
So,
can?
okay, so Parag, I would like to speak on it. Thanks, Gopal. You are right that the penetration, insurance penetration in our country is quite low compared to many of the developed countries. It is close to 4.2%, where the life insurance forms a major part, which is 3.2, and 1% only is the general insurance industry or non-life, which I am representing. So to talk of inclusion, insurance inclusion and penetration in the tier three, tier four towns, in our company we have got small one-man offices or the distribution agents who are on the field trying to explain or convince the customers at the lower strata of the society about the importance of insurance. So we all know motor being a mandatory insurance governed by the regulators. Apart from that, now that health insurance, the awareness has grown with the corona coming up, but still majority of our people in the lower strata still feel it is the government who has to insure us. The government has to take care of our insurance needs. So with the Ayushman Bharat coming up, but still we find lot of a middle, the lower middle class or the middle class, which is still away from insurance. Whatever has been done by the government or mandated by the government is all, but majority of them still need hand holding or understanding of what benefits they could be drawing from getting insured. So to achieve that, we have distributed tablets to our field staff, tablets and mobiles with data card, and we've given them the easiest or the straight through process niche products or the sachet size products which could be sold through those mobile devices, and with the minimum inputs, majority of the inputs getting filled, pre-filled using the rule engines, the validations, the backend API integrations. So what we have today is we have not only strengthened our front end or the portals and mobile devices, but we have also strengthening or digitalizing the backend core system in a manner that it is able to fuel my front end or field devices with the right information, and the rules and validations also taking place through the APIs, the premium calculation, the claim disbursement, the payment or the collection is all being driven through APIs. And thanks to so much of payment gateways, they are available, the UPI, the Beam, and all that, that even the smallest element or the at the remotest area of the country understands UPI, and then we are able to serve the customer either through the receipting or the payments, claim payments, seamlessly using that mobile device or the tablet. It could be a portal on the tablet, it could be a mobile app, but giving a seamless experience, omni-channel experience, not only to the customers, but also to the distribution partners, the intermediaries, the cooperative banks, my agents, small-time agents who are moving on the field to serve these customers. So this is what in our company we have seen to it, that we are not only digitalizing or disrupting the front end, we are also modernizing my legacy applications in such a way that you are serving the customers in a plug and play manner. That is all from my side. Thank you.
Thanks, Seema. I
Yeah.
think platformization, micro insurance, I think these are the way go forward. Parag, you want to add anything more?
Yeah, just quickly, I agree with what Seema has said. If you look at the ecosystem, there are three constituents. One is the government, second is the regulator, that is IRDA, and third is the insurance company. So if you look at the penetration aspect that you just asked on that front, so government is doing quite a bit in terms of increasing the penetration through government-sponsored schemes like Ayushman Bharat, Pradhan Mantri Swasthya, the crop insurance scheme, as well as the Jan Dhan accounts through which a small personal accident cover was also given. So government is doing a lot to, and that has really helped to get the insurance awareness going in the areas where there is under penetration. Second, regulator is doing a fantastic job in terms of trying to increase the penetration. Various steps like standardization of products. So what IRD has done and is trying to do is, to cut the jargon off and standardize the products which really help to increase the penetration. Second, coming up with long-term policies. For example, in motor, where the penetration levels were high, but still, we've now got a 5-year policy on a two-wheeler and a 3-year policy when you buy a new car or a new two-wheeler, and that all of a sudden has ensured that at least for the next 5 years, a two-wheeler is insured. So that further adds to the penetration kitty overall. Another example is the customer service centers, the CSC that initiatives that these are the small customer service centers opened by the government for Aadhaar registration, death certificates, etc. So those are also being used as distribution points for insurance. So IRD is doing a fantastic work there. On the insurance company side, what all of us are trying, or at least we are trying, is to simplify the products and identify unique distribution points, like what Seema spoke about, to reach to these level. Even in the urban areas, there is a lot the so-called missing middle. Even the government has started this project. The maids, the taxi drivers, that segment which is not below poverty line, but it is not, a medium class or above that threshold. So that segment itself, even in urban areas, the insurance companies can do a lot in terms of designing products which addresses their needs and hence get them in the insurance fold. So I think all the three constituents, the government, the regulator, and the insurance companies are doing a great job to increase the penetration.
Thanks, Parag. I think I like the way you have mentioned it is not a one person's job to get the insurance inclusion. All the actors in the ecosystem, all the stakeholders who have to work collectively. So that's a great way of summarizing it. Maybe I will also ask Rajesh if you have any other additional points to add this same question. Rajesh? Rajesh, you're on mute.
Rajesh, you mute.
Sorry, actually, I'm saying the information from Parag was quite useful. I don't think I have any further comments on this at this stage. Quite
All right.
self-sufficient.
Thanks, Rajesh. You're being very humble. So moving to the my last question, which is to Ankit and Sandeep. So we have been heard a lot of open banking, open API system. I mean, being outside India, working in this region, I see many of the banks have been launched the open API, but the success is not there yet. So I would like to get your thoughts on what kind of elements or dimensions required, be it internal within the organization or external factors that will make this whole open API been successful. And I've also heard some good statements in the budget of CBDCs, Digi coins, etc. How do you think all this relevant for the market at the moment? So
Yeah,
to Mr. Ankit and Sandeep, yeah.
it's open banking is a very interesting space. In fact, we have been devoting a lot of our budget and the manpower towards building a very robust open API architecture, supporting and partnering with various fintech players in the market. So open banking has facilitated fintechs to offer a more inclusive banking experience to the customers, which is much beyond the traditional bank, what a traditional banking application has to offer. Building the synergies between various players across the ecosystem, and while doing that, bringing values to each of them by offering opportunities for upsell and cross sell. um, you know um, the USP being innovative products, the agility that they bring, and also a distinct culture. Especially when you talk about neobanks. They I think one very interesting aspect is studying customers' transaction habits and offer a well curated sales proposition. So the possibilities are endless. For the consumer, on the other hand, it promises a lot of choices, better services and frictionless way of doing commerce. For example, WhatsApp, payments through WhatsApp, Amazon, PayPal, Facebook, or maybe asking Siri or Alexa to transfer funds on your behalf instead of logging into a bank's digital banking interface. With all this good, there's also a element of risk that comes into the play. While the regulatory bodies have laid out lot of standards and the checks, more from a process and data risk perspective, to define what fintechs or a bank can do in this space, what they can't, especially around KYC, Aadhaar authentication, sharing and storage of customer data, and these are evolving as well, as the use cases evolve. Now with RBI setting up a fintech department which is specifically targeting the space, I think we should expect a more elaborative guidelines on open banking in coming days, which would I'm sure is going to change the ways the integrations these days are, or the partnership these days are happening. Use cases like lending against digital gold. We have recently we have been working with one of our partners to do that. I think it's very new and not much heard about, but I am expecting more such use cases in the coming days, which is essentially going to be helping the customers to in their banking journey. Technology risk, I think, is a key area for the banks and the fintech both to champion, while to operate at high performance with high resilience, in order to offer a frictionless experience to the customer. And building an infrastructure which does that is remains a focus area. We have been into this space for some time, and we have been continuing to invest, evolve our infrastructure to support the growing expectations from the partner in terms of the performance over the APIs, the kind of the kind of inclusiveness that they expect from what we offer. I think we continue to do that, and I'm sure that is one space not just us, all other banks and financial institutions are investing time and effort on. On the digital currency bit, I think yes, I think it was interesting to see RBI coming up with something of those lines. But for me, I mean, it's a bit too early to actually draw a notion. But digital currency space has been highly unregulated one, and in fact, that is the USP that the customers have seen. It would be very interesting to see a regulated player in that space, and how things work out. Yeah.
Yeah. Thanks, Ankit. Very interesting views, and wish you good luck on transforming and leveraging some of this API. Maybe I pass on to Sandeep. Any viewpoints here, Sandeep?
Yeah, so I think Ankit did touch upon a lot of issues and solutions. Open API, open banking have been there for some time now, and people are adopting quite a bit to harness the advantages of not investing in technology too much, and then thereafter there are often also provide services which are much at a higher level. However, we have been having these open APIs, etc., in very, very niche areas right now, especially in the finance and lending side. One major uh, thing that is going to happen in future for sure is going to be the account aggregator which RBI is approved upon, which will actually harness the data of customers across all financial instruments. The power that account aggregators will bring in to lenders like us who do not have data, for example, outside the bank statement or a bureau, we don't have customer transactional data on any other platforms, etc. Once the account aggregator model comes into picture, we will also have access to that set of data, and we'll be able to undertake one of the most important activity, which is underwriting, much more efficiently and much more efficiently and in advantage for the customers as well as for the organization. On the CBDC or the central bank digital currency, I think it's a very progressive step from the government. It clears a lot of ambiguity that was there in the market. Secondly, it will also harness the importance of digital currency going forward while still being in the legal framework. One of the biggest issues with currency right now, and I'm talking about the cash currency, is the anonymity of the cash that is coming from. I think in the digital currency framework, as we move ahead, that risk will go away, and we can harness more and more, advantages of that in the whole, creating the whole money trail and the transaction trails, etc., to the advantages of both customers and the organizations who are using those digital currencies.
Right. Thanks, Sandeep. So with that, I would like to take a pause here. I think we have overshot of our time. Apologies for the technical glitch here and there, but great viewpoints from everyone. A lot of experience coming from all of you. Wish you good luck in your own organizations, and I wish to see as in country we prosper, all of us together. Thanks, and have a good day and week. Back to you.
Thank you.
Thanks,
Thank
thanks
you,
everyone.
speakers,
Yeah,
for
bye.
such insightful session.
Thanks.
I would like to ask the speakers to stay back for a while, as we will be sharing the token of appreciation to all the speakers. I would like to present the token of appreciation to Mr. Gopal Kiran, Global Head of Banking and Financial Services Insider. Thank you, sir. Mr.
Thank you.
Surajit Roy, thank you so much, sir. Thank you for joining.
Thank you.
Ms. Seema Gaur, thank you, ma'am. Thank you for joining us today. Thank you for such insightful views. Thank you, Ms. Priya Deshmukh-Gilbile, for joining us today. Thank you, Mr. Ankit Khare. Thank you, Mr. Parag, for such insightful views of yours.
Thank you.
Thank you, Mr. Sandeep Ranjan.
Thank you.
Thank you, Mr. Rajesh Garg, for joining us
Thank
today.
you. Yeah.
Thank you so much, everyone.
Thanks all. Nice
Thank
knowing.
you.
My privilege.
Thanks
Thank
everyone.
you.
Yeah.